Good morning and welcome to Unusual Activity on FinancialJuice.com with George Avedon and Milton Marmonides. Thank you for joining us this morning. This 5th of December, non-farm payroll day. Certainly lots of activity in the markets, lots of conversation about the non-farm payrolls. We'll get into the numbers in just a few minutes. We'll get into the technicals after that as well. Taking a look at the S&P futures now are more or less flat, up about 0.25% at 2072.25. We are looking at also oil. We're looking at lower by 47 cents at $66.31 on oil, and gold this morning is down by $14.70 at 1193.10. So again, S&P futures are more or less flat. Certainly a bit of gyration in the markets this morning, and we'll get into that in just a moment. So let's first take a brief recap of yesterday's trading. Overall, relatively low volatility for most of the trading day. Lighter afternoon volume in anticipation of the non-farm payroll. We had the Dow Industrials finish lower by 0.07% at 17,900.10. S&P 500 lower by 0.12 at 2071.92, and the Nasdaq finishing lower by 0.11% at 4,769.44. Again, so what we've been seeing, actually, what's very interesting is recently the afternoon trading has been rather lighter volume as of late. Again, very interesting dynamics there. So again, we'll see how that translates into today's trading. Certainly Friday, holiday season, obviously, we're anticipating a burst of volume, burst of activity in the first half hour of trading or so, maybe hour and a half into the 11 o'clock hour, which is your normal opening rotation from 9:30 to 10:30, and then we're possibly going to see a bit of a tail, a decrease in volume and activity as we get into the afternoon of trading. Certainly from a geopolitical perspective, always on the lookout for news out of the Middle East, specifically on ISIS, ISIL. Also, what we haven't mentioned is we've mentioned it implicitly, not explicitly, but the fact that ISIS, ISIL, certainly they're in the Middle East with respect to oil coming down this much certainly has an effect on them as well. I know we've been discussing how it affects Russia and the Middle East and OPEC nations and so forth, but that impacts that as well. And so I think that's an important thing to know. So again, watching that activity out of that, certainly always keeping an eye on the Russian-Ukrainian situation, renewed talks and renewed fighting. But again, it seems as though, at least for the last several weeks, as fighting has escalated between Russia and the Ukraine, we have seen as if the markets overall have internalized that particular variable, whether Russian-Ukrainian fighting increases, how much of an effect does that have on the macro indices. So again, we've seen that, we've really seen that take place. So unless something egregious occurs, the anticipation here is that the markets will really not really react much to news out of the Ukraine-Russia. But again, we do keep you posted on what's happening out there because we do feel that it is important. And again, with respect to oil, Russia's reaction, certainly talk of recessionary pressures in Russia, the fact that the ruble is in multi-month lows, oil is at lows, there's a lot of pressure on Russia. So again, and that coincides with the geopolitical environment in Western Europe and also Eastern Europe. Remember, Russia provides a huge amount of gas to natural gas to Western Europe, not as west as Spain, perhaps as France, but certainly Germany and other countries, Central European countries, and also Eastern European countries as well. So let's a couple of things on the political side in the U.S. Uh, Boehner vows to avoid government shutdown with help from Democrats. That's been in the news. Also from the ECB, discussing over $1 trillion purchase program. We know that Mario Draghi spoke yesterday. We had the Yohe Elam join us yesterday with respect to his views on the ECB, European EU situation, economic situation. So really what's anticipated from the ECB is that the anticipation is for quantitative easing is to be somewhat announced in January. So that's very interesting on that. Let's dive into the non-farm payrolls, specific numbers, and again we're looking. So non-farm payrolls for November were 321,000. They anticipated was 225,000. The prior was revised from 214,000 to 243,000. So clearly, we had a very significant increase in non-farm payrolls. Although unemployment rate stayed at 5.8%, previous was 5.8%, and as was expected, average hourly earnings increased by 0.4%. From the expected 0.2%, and so that's we have from the previous was 0.1%. So again, interesting if we get any pressure from that, the average hourly earnings. Also, we had U.S. trade balance negative 43.4 billion versus the expected negative 41.2 billion. Previous was 43.0 billion, revised was 43.6 billion. So some rumbling based on the non-farm payrolls is Fed rate hikes are pricing in July now. So again, we'll keep an eye on that. We have off of that, we have a 10-year at 2.294 and a 30-year at 2.958. We have the 30-year still below that 3%. The 10-year did come up to 2.310 yield and back down below 2.3. Now we'll see how that translates into the market. We have just to check on S&P futures are now lower by 2.00 at 2069.70, actually 2070.00. So that's where we are on the future. Futures. If you take a look at the chart, and we'll show you the ES, and then we'll get into what we're anticipating else for economy today. So if you take a look at the top of the chart here, that's the S&P futures. We did have a bit of a tumble down from the 830 numbers from the non-farm payrolls. We did recover most of that, and it seems as though we're coming back down to that level. We're at 2068.50. We're at 2070. So again, rather tight range. I wouldn't say it's very volatile, but again, some reaction in the futures. Also, Fed's Mester says monetary policy an option if macro prudential tools fail. So again, interesting out of that. We're always looking for. Remember, it's an opinion based on a Fed governor. They may be speaking, may be commenting, and also we are anticipating another Fed governor today, Stanley Fischer, speaking at 2:45. We do have factory orders at 10 a.m. coming out as well, and the consumer credit at 3 p.m. So we'll finish off the day today with consumer credit finishing off the week. So again, we'll see how that impacts that market there. So a couple more things out of the non-farm payrolls is that full-time jobs down 150,000. Participation rate remains at a 35-year low. This is according to Zero Hedge. So again, very interesting on that. What we'd like to do is let's get some opinions from Milton on his thoughts and where we are on the technical side of things. Bear with us as we. So we'll take a. Let's jump into the ES Milton. Kind of a. Would you say kind of a, I don't know, kind of a ho-hum reaction to the numbers?
Well, George, no one wants to see a good economy because what happens? All the QE, all the the ease of money is gone from the Fed.
The drugs.
Yeah, they're taking away the drugs.
Yeah.
And when you see something strong, you're like, it's weird because for the past 5 years, all I've been trading on is Fed-induced rallies. So what happens when reality finally sets into these markets and rates start to rise? QE right now is completely out of the question. You had a number that is the largest number since 2012. So that is out of the question. A lot of people were mentioning there was a Hilsenrath piece yesterday talking about the Fed is maybe behind the ball, that they may need to raise rates faster and sooner than they expected. Clearly, with a number like today, that's back in the picture. People, we've been making calls around desk. A lot of people have been mentioning the two words that everyone cares about in the Fed: considerable time. Is that going to be gone next? Because with a number like this, wages growing, a number surpassing over 300,000. Clearly, it's something that people did not expect, and a lot of people are thinking to themselves, could this be the end of easy money policy in the U.S.? We'll see what happens with I think Fed is next week.
Okay.
So we'll see, or whenever they are, but we'll see what their commentary is.
Yes.
Clearly, a lot of people, typically with a number this strong, the market should be rallying. It seems like the good news is bad news now for now, so we'll see what the rest of the trading day offers. Let me just jump on some tech real quick. We'll look at the quick ES. The resistance levels are basically where we are, the previous highs, and that's going to continue until we set a levels here and there. But as of now, the previous highs are the resistance levels. We're looking at about 2077.25 on the ES. Very short-term resistance. Support daily still in that 2035. Intraday support's looking around 2066 to 2068 on intraday support levels. The volume is still anemic. We're still waiting to see some volume coming to this market. It's still not there. Even on a day like today, pre-market, the volume is just nowhere to be found. So we're waiting to see. What?
A question for you, Mil. So if we continue to see anemic volume for the rest of December, I mean, we could probably be at this level for the rest of the year.
Typically, like we mentioned about a week ago, typically in the month of December, especially on low volume, you get hardly any moves. Unless something comes out of left field, either a positive or negative, we really don't want, we really are not going to see that activity of volatility. You've been having a lot of commentary yesterday. Bill Gross also as well came out to the market is just too complacent. And right now, you have to see some sort of volatility. It's an interesting fact. It's an interesting commentary, and a lot of people are not paying attention to what other people are saying or mentioning. Absolutely. It's the same feel.
Absolutely.
Buy everything, and until that ends, and we've been mentioning that for how long, That is the feel right now in the market. The complacency, there's no volume, no volatility. Complacency is buy everything. Clearly, it's been working. Until that ends, when will that happen? Who knows? But until that ends, it's gonna be the mentality and the complacency moving forward. Let me just jump on oil because we always have a lot of oil commentary out there. Oil. What can I say about oil? Oil is oil. You know, oil is something where you're in a very delicate area right now, very delicate sector. You're having a strong dollar. Many people are not even mentioning how the impact of a strong dollar on oil is. It's tremendous. So oil is, weak. It's getting weaker. It's back to 66.33, down 48 cents on the day. Typically, on a technical look at it, you're sliding to lows. Ideally, the 63.72 level that hit that pre-market the other day is the ideal support. Currently, right now, it's going to be interesting to see what these oil traders do with these names. It's like flipping a coin in the air and trying to guess what the next move is going to be. No one knows.
And Milt, I'm glad you said that. The dollar is, the DXY is certainly higher this morning, and we always bring this up, and I'm glad you brought it up. The fact that the impact of the strong dollar has on energy prices and commodities. So I think that's very poignant.
Yeah, so it's going to be it's a very interesting situation we are in. It's a very interesting feel, especially in oil. To really understand it, it's very difficult. It's very hard to get an ideal feel on what exactly is going on with oil and the oil trade. Right now, we've been mentioning for days, our opinion, stay away. Sit back, watch, wait for some consolidation in the whole sector, and then make a considerable effort onto which direction you want to play. But right now, it's a toss-up to the up and down side. Clearly, a lot of people were caught in this trade. Are they still in the trade? Do they have to puke by the end of the year? What is the real, the feel on this whole oil sector? No one really knows. That's why we always say be careful, take a step back, evaluate before you put on a trade, especially in a commodity like oil, and especially when we have no feel or idea of what really goes on overseas to manipulate this price in oil, because that's what clearly it's being. It's being a situation where every time oil is mentioned, it's clearly one to the other. One guy says one thing, the other guy says, you know what, don't listen to them. You're hearing reports of them cutting, then you're hearing reports of them not cutting. So you have to be careful on headline news on oil because so many people are in this sector, so many people play it, and so many people, in my opinion, have gotten hit lately in this name that they're going to do whatever they can to manipulate Ace and hopefully get out of positions. That's my rant on oil. I don't want to keep on going with that because I can go on all day long with oil.
Well, Milt, I think you bring up a great point, and the reality is we talked about this. It was a clearly binary bet in oil on the fact that whether or not the OPEC would reduce production or keep production at the same level. Clearly, a lot of folks were wrong. Right, I mean that's basic stuff. So that's why you had this really violent moves within oil, and I think we talked about this offline. I think that trade isn't done yet. I think the reality is if we see some more fluctuations in oil and oil stocks, I think we'll continue to see potential fluctuations to the downside because I think people are still holding on to that particular trade.
I agree 100%. So, it's a tough one. We can go on all day, like I just mentioned, but we'll end at that little thing. VIX. What can I say about the VIX? It doesn't move. There's no volatility, so there's no reason to even talk about the VIX until something happens. Basically, it's been in this 12 to 14 to 15 range for the past couple of weeks. Clearly, it's going to stay in that range until something happens. We'll see what the activity does this morning, but as of now, there is no VIX index to even mention or even talk about anymore until something happens. So we'll just move on from VIX to gold real quick. Another name that is closely being watched is gold. Gold right now, is trading right at that support level. We've been mentioning that 1,200 number. Broke that number earlier this morning after the unemployment numbers came out. Broke the number, hit a low of 1186.4, but clearly it's attracted to that tractor beam of 1,200, trades right back to it. As of now, that's the number to keep an eye on. That's the level to watch to the up and downside. Until we get a substantial move or a volume-based move off that number, that's going to be the number to be talking about the next few days. The downside, we got that 1150, upside 1250. So you got about a 100-point range in gold, and we are right in smack dab in the middle of that number right now, around 1200. So that's the gold. I wanted to mention one thing as well.
Please.
A lot of people have been, I've been talking to a lot of people this morning regarding the economy and regarding just such great unemployment, report and this and that. One question I have to ask everyone who is out there saying such a great number, the economy is unbelievable. Why is the 10-year trading at 2.292 when, excuse me, November of last year when everything wasn't that rosy, the 10-year was trading above 3%. If everything is so great, everything is so rosy, and the number was gangbusters, why is the 10-year only up 35? It's only up 1.2% on the 10-year yield. This 10-year yield should be up 5% on a number like that typically. So a lot of people mentioned that. I've been talking with a couple people this morning regarding that. So it's on a lot of people's minds. What really is behind this number that came out this morning? Are they high-paying jobs? Or are they, the type of jobs that are temp jobs for retail, for seasonal? A lot of people are not even mentioning the seasonal effect on these numbers. I'd love to see what happens in December and January. I'd love to see, what some people's commentary is. But in all regards, when I sit back and look at these markets this morning, I really do not see that much exuberance off these numbers, and it's quite interesting to me, George, that's what's my feel on this number.
No, Mill, I think you bring up some good points. I think, in my mind, when we talk about the 10-year and the 30-year, and the reason we bring up all these different elements. I know there's FX traders out there, there's commodities traders out there, equities, derivatives, but you really have to, we use. I guess you can call it the mosaic theory, where we try to put things together, different elements, different notions together, and come up with some thought process, some rational opinion on why something is happening. The one thing that is very key in my mind. So when you take Milt, I think you bring up a great point here, and again, I'm not trying to be U.S. centric or so forth. We really try to have a global opinion of things. We certainly have guests on from across the globe and so forth. But take a look at something. What typically happens in the U.S. Is specifically with the Treasury. It's a particular instrument of security. So if there's some concern globally, where you're getting, whether it's a slowdown in economic activity, rate fluctuations, currency wars. The U.S. Treasury market tends to be historically a place where investors go for a little bit of security. So I think that's pointing to perhaps the lower, still considerably lower yield currently at 2.289, which is rather low, considering if we're getting positive information on non-farm payroll, if we're getting various other indicators, ISM numbers that are still in the expansionary frame, in the expansionary framework. So again, in that, with money coming into the treasuries, basically providing a bid in the treasuries, preventing the yield from increasing. Again, it's an inversely related topic here, whereby if you're buying a bond, the yield goes down. So clearly, we're getting a bid in the 10-year treasury specifically. that points to a higher dollar. It points to a strong dollar. If it points to a strong dollar, you're going to have an impact on oil. Um, uh, that makes it more expensive for outside. You know, if you're converting, for example, the euro into the dollar to buying the oil, if you're converting from the ruble to the dollar to buying the gold, you know, this is, you know, Econ 101, guys, but it's really important to really get a handle on that, and it'll give you a better idea of what's really happening out there and why things are moving the way they are, and in conjunction with each other. So again, I wanted to bring that up, and Milton, you know, is very poignant in bringing up, you know, the yield. And again, keep that in mind, that when we look at the U.S. economy, when we look at the U.S. Treasury, it tends to be a bastion of a bit of security, not just in the U.S. but globally, historically. Okay, so as we're approaching this, just keep that in mind. Let's take a quick check on how we're doing in Asia. In Asia, we were higher on the Nikkei by 0.19%, Hang Seng higher by 0.71%, Shanghai again rather high, continuing its positive momentum here by 1.32%. Remember, China reduced their outlook, GDP outlook, to 7% about a week and a half ago or so. And we'll see how that translates into. Remember, the yuan, the yuan is tied to the U.S. dollar, and the Chinese have a very, very tight grip on that particular currency. And you know, one can save spending a little bit of time on currencies here. We'll just jump into this. Is Russia, you know, wants to support the ruble. It's not. It's hitting them directly. It's hitting the consumer. It's hitting the population directly with such a low ruble. So that's very interesting. So it's spending a little bit of time, since we're on the topic, on the. We'll pull up the E-mini euro. The euro at 1.23%. As we spoke with Yohei yesterday, it would not be out of character for the euro to go to 1.2000 or below. We're anticipating monetary policy, a QE out of the ECB in January, so that's going to impact. And we also talked about the DXY this morning. Certainly, actually, if you take a look at the chart here, we'll bring up the chart both in the DXY and the euro. As a comparison on the daily here, we'll bring up the E7 here. This is so up top you have the E-mini euro, currently at 1.2306, and below you have the dollar. Dollar is a multi-month high at 89.173, and you look at the euro, a multi-month low at 1.2306. You'd have to go a bit farther back to get the euro this low. You'd have to go back to July of 2013. We had a low of 1.205. We brought that up yesterday. And in the dollar, we can go back. It's rather high, folks. So again, that's going to have an impact on oil and other dollar-denominated commodities as we're monitoring this. So again, very interesting on that note. So let's take a quick peek on how we're doing in Europe. Higher by 0.83 on the FTSE, a little bit higher than we were. CAC and pairs higher by 1.75. DAX in Germany higher by 1.67. IBEX in Spain higher by 2.26%. So a rather positive move in Europe. Again, we want to bring this up. We'll show you the slide here, folks. We bring this up just so you can keep on oil ETNs and ETFs. These are oil names, both in the short and long term. Specifically, some of them are 2 and 3 times volatility, but very good to keep an eye on them. Moving on, let's take a look at commodities, energy, and raw materials. Crude oil at $66.22, lower by 56 cents. We have on the distillates, we have gasoline lower by 0.0168 at 1.7780. Anecdotally, on the gasoline side, certainly the Northeast typically pays the highest gas in the country. We are now below $3 in some locations in the Northeast, so that's certainly a boon to the consumer's pocket with respect to discretionary income. We had heating oil lower this morning as well by 0.006 at 2.1114. Natural gas higher by 0.078 at 3.727. Gold, as we mentioned, lower, not as low as it has been, down by $9.50 at 1198.20. USD silver lower by 18 cents at $16.39. Platinum lower by $15 at 1230.6, and cocoa higher by $33 at 28.98. On the 10-year check and the 30-year check, we have a 2.280 on the 10-year, and the 30-year we have a 2.949. As we've been mentioning, we don't see too much fluctuation on the 20 and 30-year, although the 30-year did go below the 3%. For us, the real concentration is the 2 and the 5-year, currently at 0.61% on the 2-year, and the 5-year at 1.67%. So that is the belly of the curve, and if you take a comparison of where the current yield curve versus a year ago, we have a little bit of a flattening. So we had a 2 and 5-year higher yield on the 2 and 5-year, lower on the 10 and the 30-year. That's a little bit the angle on the curvature is flatter. So is this pointing to a less of an expansionary environment, specifically in the U.S. economy? Again, that's an interesting topic, and we'll continue to monitor this. We talked about the technicals. Let's get into some of the stocks that are making news this morning. Bear with us one moment. So we had a few things come through. So RSH is Radio Shack to stop matching 401k retirement plans, according to Bloomberg. RSH this morning. RSH this morning lower. Actually, so again, market open about 2 minutes lower this morning by 4%. Bear with us. Let's get a lower by 5% now at 56 cents. Also, MET close to systematically important label, according to Bloomberg. MET. This is MetLife. We can take a look at actually where it's opening this morning. Higher by 1.82% at $56.19. AMBA. Jarden downgrades Ambarella to sell from neutral. It has a $40 price target. Stock is lower this morning at about 4.5% at $53.14. And just we wanted to put that in there. According to the Bureau of Labor Statistics, the birth rate is positive 8. Previous was positive 137. A couple of things on the syndicates. CIO 3.75 million share spot secondary priced at $12.50. at currently at $12.53, lower by about 0.5%. FCAO files to sell 87 million shares of common stock. Stock is higher this morning by 2.5%. GTT files automatic common stock shelf lower this morning by 3.5%, currently at $13.13. GLP Global Partners lower by just about 5.5% at $39.50. Offers 3.57 million common units representing limited partner interests. Again, folks, typically when you get syndicates, secondaries, tends to be a dilutive effect for the particular security, meaning you'll probably have at least an initial reaction, a decrease in the price of the particular security. SMBC, Southern Bancorp, really not doing much. Files to sell 345,000 shares for holders. TRVN, 11.25 million shares, secondary price at $4. Stock is higher actually this morning by 6.8% at $4.34. Let's get into some of the top insider purchases that we have this morning. ATLS, 10% owner purchases 3,000 shares at $32.56. Stock is lower this morning at $33.20. PSEC, CFO purchases 162,000 shares at $9.12. We did have a little bit of a volume tick up in PSEC. Stock is higher by about 0.6%. TCAP, Triangle Cap, is higher this morning. Director purchases 5,000 shares, higher by 0.7%. OC, director purchases 8,400 shares at $35.82. Stock currently at $36.65, up higher by about 0.5%. HEES, waiting for that data to come up. It's higher by about 5% at $30.79. BBG, Bill Barrett, higher by almost 7.5% at $9.63. Senior Vice President purchases 10,000 shares at $9.36. We did have some volume in that stock. It also director purchases another 10,000 shares at $9.50. So again, we're getting some interesting movements out of BBG. This morning. VISI, excuse me, Volt Information Sciences, not much doing this morning. Owner purchasing 10% owner purchasing 25,000 shares. BTU, CEO purchasing 5,000 shares at $9 and a penny. This is Peabody Energy, and folks, I know we've been seeing a lot of excuse me, we've been seeing a lot of oil names really getting hit recently, certainly with the OPEC announcement last week. So again, all these names will be interesting to monitor over the next days to weeks on whether we can get a recovery out of that. Excuse me. A few more on the insider purchases. Continental Resources CLR. At $38.65, director purchasing 15,000 shares at $40.20. CLR, remember, this is the Harold Hamm Company, and remember, Harold Hamm was one of the oil mavens. He's been dealing with oil for a very long time. He anticipated oil to go higher. Certainly we didn't see that, and CLR certainly seeing a bit of a downdraft as of late since that announcement. NBR, director purchasing 5,000 shares at $20.36, currently at $20.54, higher by just about 3%. WRLD, 10% owner purchases 6,000 shares at $75.59, higher by just about a percent there. We'll get some of the larger names here. QTM director purchases 50,000 shares at $1.64. Currently, the stock is higher by about 1.8%. Currently, $1.71. JONE. CEO purchasing just about 160,000 shares there. First lot at 1241 and another lot at 1012. Interesting there. Jones Energy. So Jones Energy higher by about 5% this morning. Currently at $10.51. Let's have a quick recap of where we are this morning. And then we will bid you a good weekend. Let's take a look at the S&P 500 futures. We're higher by 1.75. So again, a little bit of a gyration there, but again, really keeping that tight range on the S&P 500 futures. So ES at 2074.25. Main thing is, as we've been saying before, it's really this volume follow through. If you don't have the volume follow through, whether it's on the upside or the downside, you will really have to. It won't be really a conviction move. So again, volume is key here, in addition to price movements as well. 10-year at 2.294. 2.296, just ticked higher a bit, and 30-year at 2.960. Oil broke below that $66 range and down to $65.85. Remember the DXY. Watch that DXY. The higher that goes, the more impact on oil and gold you're going to have. DXY currently at 89.276, and the reason we look at the DXY is it's a nice index versus 10 other currencies. So again, we're getting some interesting strength out of the dollar based on that non-farm payroll number. So again, folks, we're at 10 o'clock. We're anticipating the factory orders. 3 o'clock is the consumer credit. We also have Stanley Fischer this afternoon as well. We'll see if there's any monetary conversation coming out of that. So, folks, thank you for joining us on Unusual Activity on FinancialJuice.com with George Avedon and Milton Marmonides. We have some really great guests this week. Tune in next week. More to come. Certainly, I'm sure more volatility and more news out of global and domestic geopolitical macroeconomic news coming out. So, folks, thanks for joining us, and have a great day, and wishing you good hunting. Have a great weekend.